Yes, Sirski, how we doing today? Welcome back to the channel. You beautiful, crazy investors, right? All the apes out there too. Shout out to y'all guys. We had a good day for sure. Up over 6% for AMC today, right? And of course, as always, welcome to the new subscribers. Thanks for hitting that subscribe button. I really appreciate it as we grow the family bigger and bigger, right? I guess people really liked the DD on Friday, right? That video that I put out, it got a good amount of views, right? New subscribers and all that, so shout out to y'all. Thank you. Also, today I'm going to dig into more of that, right, of what I was talking about Friday, which has to do with the new SEC transparency rules that are coming into play. And I believe I have some heavy DD, right? And this is the data that I'm using and my thesis on why this is the end game and why I think AMC and a bunch of other stocks too, not just AMC, but all these highly shorted stocks, why I believe they're going to squeeze here within the next month or so, guys, okay? Now, it's not that I have a crystal ball or anything, but I dug into this document and it's about 184 pages, right? But I highlighted just some key information because there's a lot of things that are like kind of repeated in there. So I summarized it for y'all. Let's get into it. I don't want to spend too much time here on the intro because I think I have some very important heavy DD that if you own AMC shares, you should know this, right? Or any highly shorted squeeze stocks. And there was a lot of green, right? I'm in a good mood today as well, like because my portfolios were green and my crypto was green today, right? So finally we see a bounce or something. It might be a fake out, who knows what tomorrow holds, but I'm gonna go over what we need to go over now, okay? Cool, so let's switch up to the desktop and let's bring this up first. All right, guys, like I said, the power of the apes is insane. This is part of the DD that I'm gonna talk to you guys about right now. So it's on my Twitter, right? So I put each transaction will have a unique code. No more synthetics and fake shares, apes, right? This was my tweet. And people went crazy, right? This was the picture that I found. So each transaction with a unique transaction identifier, right? So that way you can't create fake shares because each one is coded. All right. And so, I just got retweets, likes, all that good stuff. And like, shout out to all these people, right? Went crazy. All right. So let's switch it up here. What I want to talk about is this is basically the summary, right? When you go to the SEC website, and I went through it it's on the SEC Chicago Twitter. The links are there. So when you go to their website, this is just the summary of what this is. So this is the real document. This is the real proposal, right? And remember that lady who voted against the transparency, right? This is the document that I believe that she didn't read. That is 184 pages, right? Cool. So let's dig into what it is. Okay, I'm just gonna get started here, guys. It is gonna be a lot of text and talking, but it really is important information because the new market is coming as the new rules, right? In my opinion, when the government was digging into this stuff, they were kind of like blind to, like they couldn't see a lot of the information, right? So they said, okay, this is why I think it's taking so long, is because they've been working on this the past 6 months, right? Trying to figure out like where they needed to change things. All right. So this is the information I'm gonna break down. So I'm just gonna go through the highlighted points, right? So let's get started. The Securities and Exchange Commission, right, the SEC, is proposing a rule to increase the transparency and efficiency of the securities lending market by requiring any person that loans a security on a behalf of itself or another person to report material items of those security lending transactions and related information regarding the securities and the person has on loan and available to the Loan Registered National Association, right, which is this. The proposed rule will also require that they make this available to the public, certain information concerning each transaction and aggregate information on securities on loan and available to loan, right? So we're going to scroll down. Like I said, I'm just going to, if you want to go check this out, it is on their website, all right? So I'm just going to keep going down. I'm just going to go over the stuff that I think is really important so that we can prove and debunk some of these ideas and theories, and we have real data now, right? So the securities lending market is opaque, right? And due to this act, it provides the commission with the authority to increase transparency, among other things, with respect to the loan of borrowing of securities, right? So we're talking about when the banks and the brokers and the hedge funds are all like lending each other shares to make money, right? To make profits. Okay, so it also mandates the commission promulgate rules designed to increase the transparency of information available to brokers, dealers, and investors, right? So everybody, making it a level playing field. Although various market participants, such as registered investment companies, are required to make, they're in quotes, are required to make specified disclosures regarding their securities lending activities. Parties to securities lending transactions are not currently required to report the material item of those transactions, right? So we're talking about those changes, right? We're talking about, here we go. This new stuff, right? So all this information of what's required, right? We talked about it in the last video. That's what we're talking about right now. But this is the details on it, okay? Go down. So on September 30th, 2020, let's see what it was. The value of the securities on loan in the United States was estimated at about 1.5 trillion. Yet, despite its size, the securities lending market in the U.S. has a general lack of information available to its market participants and public regulators. Based on lack of transparency and statutory objective to increase transparency in securities lending transactions, the Commission is proposing, this is the rule, right? The new rule that they voted in from what I believe last week, okay? So it's already, this was the proposal, but the rules, these were the rules, the details, they're already approved, right? So they voted yes on it. Which would require any person who loans a security on the behalf of itself or another or a lender to provide specified material terms in the securities lending transactions to the RNSA, as discussed more fully below. Let's go. All right. So industry observers and market participants have suggested, right? Industry observers and market participants have suggested that the Commission consider measures to provide additional transparency in the securities lending market, right? So there's a lot of people from different, retail investors, institutions or whatever, they're also suggesting, hey guys, you should maybe look into this. Furthermore, there have been other calls for additional transparency, including in testimony during a hearing before the House of Financial Service on March 17, 2021. Such testimony supported the creation of a consolidation tape or a public data feed of securities lending transactions. The lack of the public information and data gaps created insufficiencies in the securities lending market, right? So after the apes made all that noise, guys, this is what's coming from it, right? These gaps are also impact the ability of the Commission and other self-regulatory organizations and the other federal financial regulators, collectively regulators, to oversee transactions that are vital to a fair and orderly and efficient market, okay? And none of this is financial advice, guys. I forgot to tell you guys again, but I'm not a financial advisor, right, guys? I'm just bringing this data that I found on the internet, right? The public data. But if you read into the fine print, guys, it's bullish. It's good for the apes, right? Now, let me continue. So available on securities lending transactions are spotty and incomplete. In my opinion, guys, they do this on purpose, right? So that we don't know what is really happening, right? Or we can't see the real data. And I think that's where the government ran into problems too, where they couldn't see the real data, and explains it later. But to supplement the publicly available information involving securities lending, close the data gaps in the market, and minimize information asymmetries between market participants. This new rule is designed to provide investors and other market participants with access to pricing and other material information regarding the securities lending transactions in a timely manner, right? So that's what the other problem, right? T+2, they only report monthly on their shorts, right? Stuff like that. So this proposed rule would improve price discovery in the securities lending market and lead to a reduction of the information asymmetry faced by end borrowers and beneficial owners of the securities lending market. All right. The data elements provided to RNSA under proposed Rule 10C-1 are also designed to provide the RNSA with data that could be used for important regulatory functions, including facilitating, improving its in-depth monitoring of member activity and surveillance of securities markets. All right, so they're actually doing their job, right, guys? When they're if they're overseeing things and making sure that things are kind of fair, right? So let's go. So remember I was talking about failed to delivers, guys, before in the past videos, right? So this is kind of important here, but it says whether market participants are building up risk, the strategies that broker dealers use to source securities that are lent to their customers and the loans that the broker dealers provide to their customers with fail to deliver positions. Enhancing the transparency of the data, and securities should provide more information to help illuminate investor behavior in the securities market and the broader securities market more generally, right? That's what I'm saying. Like the whole market, guys, not just on AMC. Of course, I believe AMC is going to squeeze hard, right? Like we're going to see a new all-time high for sure. But this is why I'm scooping up shares personally, right? As I go. And buy and hold works, guys, because like just think of a line, right? Of just buy and hold over time. And the short sellers, right, they're going to run into a problem. Like even with all these, I mean, they're already in huge problems, but it would hit a point, right, where they meet because you keep buying shares and buying and buying. And so there's only a limited amount of shares, right? And this is what's changing, in my opinion. They're not going to be able to create synthetics anymore from this data, right? This is what I'm getting from it. So let's move on. Determine whether the terms that they receive for their loans are consistent with market conditions. Right, so because of this, reducing frictions that can exist where pricing information is not publicly available, in particular, providing access to timely, granular information that's about certain materials and the securities lending transactions would allow investors, including borrowers and lenders, to evaluate not only the rates for such transactions, but also any signals that the rates provide. The changes in supply and demand for a particular security may indicate an increase in short sales of that security, right? Let's go down. Increased transparency could include increased savings and profits for investors, right? That's what's making me super bullish on AMC, guys, and BBIG, right? Okay, and GME and all these other stocks that are highly shorted. Improve terms for beneficial owners participating in lending programs and improve competitiveness in the lending agent and broker-dealer businesses. The proposal might also reduce the cost of short selling and lead to increased in fundamental research, which contributes to more efficient prices, right? So the original, the old way of kind of investing where you buy and you hold long term, right? Not all these crazy plays that are just short squeezing every other day like they were, a few months ago. Securities lending in the market practice by which securities are transferred temporarily from one party, a securities lender, to another securities borrower for a fee, right? So every time they lend shares, they make money, but the problem is they're lending the shares over, the same ones over and over and over and over, and that's what creates the synthetics, I think, okay? A securities loan is typically a fully collateralized transaction. Securities lenders, referred to as a beneficial owners, are generally large institution investors, including investment companies, central banks, wealth funds, pension funds, endowments, and insurance companies. Broker-dealers are the primary borrowers of securities, okay? They borrow for their market-making activities or on behalf of their customers, right? Broker-dealers who borrow securities typically re-lend those securities or use the securities to cover fail to deliver or short sales. Jeez, that's insane, right? They were allowed to do this stuff. Let's see. The securities are usually known. Hedge funds rank among the largest. Sheesh. Brokers and dealers may also lend securities that are owned by the broker or dealer. Customer securities that have not been fully paid for, meaning everybody who in the first, last year when everybody was borrowing on margin, guys, they were lending those shares out, okay? That was the problem. Everybody should have been buying with cash, right? That was one of the problems, just not with margin, because these with a margin loan from the broker dealers and the securities of the customers who have agreed to participate in a fully paid securities lending program offered by their broker dealer, right? And like the apps like Robinhood, they don't even give you the option to opt out of lending, right? So all the shares that they have, of course, they've been recycling them. That's what I think. Securities lending transactions are usually facilitated by a third party, which is another issue why the government even had issues gathering data when they were doing their investigation, I think. So some large investment companies and their fund managers have created their own securities lending programs and use their own employees to staff the program rather than using the services of a custodial bank lending desk or third-party agent lender. So that's like, I would say like Citadel is probably an example of that, right? They probably can do that. Generally, when an investor wishes to borrow securities and its broker-dealer does not have those securities available in its own inventory or through customer margin accounts or loan, the broker-dealer will borrow securities from a lending agent with whom it has a relationship with. Now, that's where it gets super sketchy, right? It's supposed to be a fair market, but now it's talking about how they go to people they have relationships with. That's not a fair market. The broker dealer will then relend the securities to its customer. So that's what I'm saying. Like, that's where that's why we know, I think this is proof now officially that there is more AMC shares out there than there should be, right? That's what I'm getting from it. There are also digital platforms for secured financing transactions, including securities lending, which provide electronic trading in securities lending market. You're talking about all the apps, right? Webull, Robinhood, all those, free payment for order flow, I think. Additionally, the Options Clearing Corporation has two stock loan programs: the stock loan program, formerly Hedge, and the market loan program. All right, so there's details on it here. I'm not gonna read all that. But securities loans may be either for a specific term or open-ended with no fixed maturity date. That's why until something forces, like something like this catalyst, right, forces these shorts to close, then that's why it's open-ended. For security loans, open-ended, allowing the security on loan to be recalled by the beneficial owner. So if we were to force a recall too, like by a share count, right, or something like that, like on a blockchain or whatever, that would also, I think, cause some movement. The open recall feature of the securities loan is driven by the assumption that participation in securities lending should not impact the investment strategy of the lender. For example, a security may be recalled when its beneficial owner would like to sell it or exercise its voting rights. Man, maybe we should call some kind of meeting, right, for voting rights. Loans that provide the borrower with certainty regarding the length of the loan can be more valuable to the borrower. As discussed above, certain institutional investors, including pension funds, which provide retirement benefits, and mutual funds, which retail and institution investors rely on to meet financial needs, lend out their securities to earn income. Again, help pension funds generate income and provide additional return for long-term savers. Information for all the lenders, and most of the information would be made publicly available. Allowing market participants. So you see this information from all lenders, and most of the information would be made publicly. That's what we're saying. It's a new market, guys. Like this is not going to be the same. They're going to, hopefully, I think, I truly believe they're going to let AMC, GameStop, all these things squeeze and then pay everybody out and then level everything out, rebalance it, right? So currently, the predominant sources of pricing information for security loans are private vendors who offer a variety of systems for borrowers and lenders for securities to provide and receive information regarding securities lending transactions. Some, if not all, the private vendors operate their systems on a give-to-get model, which effectively produces access to their systems unless there would be subscriber has securities lending transaction information to provide. So you're talking about like these Ortex, you're talking about Fintel, you're talking about all these. They only get 85% of the data that is reported to them, right? That's why we say all that information is also, it's just a guide. It's not accurate. However, the available data, I need some water. So. A lot of words here, right? But it is important, guys. I'm telling you, if you understand this, it's gonna just change your whole perspective on what's coming. However, the available data are incomplete, as private vendors do not have access to pricing information that reflects all transactions. This in part reflects the voluntary submission of transaction information by subscribers to vendors, and it's compounded by the unknown comparability of data due to, among other things, the variability of the transaction terms, disseminated, as well as how those terms are defined, as no single vendor has information for all securities lending transactions that take place. Some persons pay to subscribe to multiple vendor systems in order to capture as much as the currently available data as they determine to purchase, which can be expensive. Yep. That Ortex one, I think it's like $600 a year, right? Something like that. And it's not even the full data, guys. This is telling you right here. The commission rule, which would require any person that loans a security on behalf of itself or another person to provide to an RNSA the information required by paragraphs B through E to this rule, as discussed below in the format and manner of the rules. So I think they're creating a central place where everyone has to report what the heck they're doing, okay? So this rule would apply to all lenders, right? Prescribe as necessary or appropriate in the public interest for the protection of the investors, right? This is the act, and it provides them with the broad authority to implement rules regarding securities lending transactions involving any person, banks, insurance, and pension plans. So as long as the rules involving the loan or borrowing the securities prescribed by the commission are necessary or appropriate for the public interest or for the protection of investors. Yep. Fine print, guys, making more comprehensive information regarding securities lending transactions publicly available, which could better protect investors by eliminating certain information asymmetrics that currently exist in the securities lending market. The removal of such information may improve market efficiencies in the securities market and enhance fair, orderly, and efficient markets for borrowing and the market for such underlying securities, guys. It's all here. I'm telling you. A number of regulatory benefits related to surveillance and enforcement reconstruction of market events and research. A significant percentage of securities lending transactions occur away from broker dealers, right? So that's why, like I'm telling you, when the government went to look for the information, they couldn't find it because it wasn't in their books and things like that, right? It was in a third party. The commission proposes to limit the obligation to provide specified material terms only to the lender to avoid the potential double counting of transactions that could arise from the rule required both sides of the securities lending transaction to provide the material terms. See, now it would prevent fake shares, I think, right? So typically, right, they lend to larger institutions because of the money they're making, right? And information that will alleviate the potential for the double counting of transactions and limit the burdens. All right, here. So this would apply to all securities, the whole market, guys. Sheesh. All right, looks like we're gonna go down a while. I'm telling you, this thing is long. Let's see. But I just want you, I get it. It's a lot of information, guys. You might have to pause some stuff and to understand it, or if you want to go read it on your own, guys. I mean, it's there. It's publicly available. So this would also require the reporting agent maintain certain information for a period of 3 years. The first 2 years in easy accessible place. So if they suspect anything sketchy going on, anything crazy, right, they'll go in and they'll know exactly where to look and so on and find the information they need. All right. Let's see right here. Regardless of whether the data element is required to provide an intraday or daily, this is very, very important, guys. All right. Proposed by the rule will require this to make certain data elements public as soon as practicable. The commission preliminary believes that not mandating a specific time frame will provide the RNSA with flexibility to structure its systems, policies, and procedure, but anticipates that the RNSA would make the data publicly available on a rolling basis very shortly after receipt. With respect to information under paragraph E, such information would be required to be made publicly available as soon as practicable, but not later than the next business day. So within 24 hours, right? So this is why they're doing it, to be able to make publicly in a timely manner, right? Guys, we're being heard, right? Stay with me, guys. We're almost through this. It gets to a part here where it's like there's nothing really, it's just kind of repeating. There is the questions here also, right? So on these 48, 49, 50, there's, if you want to write to them, email them, the email and the information I think is on the first page, but they actually have like questions that they would like answered, not, not just random comments, but if you want to give your 2 cents, guys, I believe the questions are there too on what kind of information and feedback they're looking for, right? So this will make public to the information required by the paragraph, the legal name of the security issue and the LEI of the issuer, right? This is all the stuff, the ticker symbol, the security, who's borrowing from who, and so on, right? How much it's the rates are and how much they're making, all that is now going to be reported, guys. Let's see. Scroll. I think there's a few more things here, guys. I know it's hitting that 30-minute mark soon. So let's just scroll. What's up? But I had to read this on the weekend, right? And that's how I started to notice that like a lot of the information is just being repeated. That's why I was like, you know what? I'm just going to highlight what I think we need to know and what's coming, guys. Why I believe this is a game changer, a catalyst, right? For all short squeeze stocks. They need to rebalance this market, all right? And because we all know, they over leverage themselves. They're in the deep hole, the hedge funds. That's why they keep telling us, as the public, to try to sell our shares, right? I think. Always just my opinion on this stuff, guys. As described above, data on securities lending are incomplete and may be unavailable to certain market participants. The available data are produced by commercial vendors. Data from commercial vendors that are based in the voluntary data contributions, largely from lending programs. Consequently, these data may be large only to cover wholesale market because the primary data providers to the commercial vendors are lending programs, which primarily lend to broker dealers in the wholesale market, and the data have limited coverage of the retail market. All right, so it's just talking about all the issues, guys. Basically, you know, we know the big dogs, they, you know, help each other, work with each other. Let's see what else. Let's see. Securities lending activity like that means that the prices at which security loans take place are not efficient currently, right? Relatively to the hypothetical case where complete information about securities lending were widely available, implying that the prices that they quote may not be as efficient as otherwise would be. All right. Let's see, what do we got there? There's currently no common source that those seeking security loans can use to determine where to find shares available to lend, right? Geez, that's why we haven't had any proof of the synthetics, right? Because literally nobody can find that information. It's not there. Only the people who I think printed, you know, made those fake shares, right? All right, guys. So just to summarize it, right? It's just, this is all very important of what's coming. Because maintaining a short position requires borrowing the security, reducing the cost to borrow would reduce the cost to short sell, right? So this is why they want to implement the rules. Reducing costs for short selling would result in benefits from the form of enabling investors to profitably engage in more fundamental research, improving price discovery in security markets, providing more discipline for corporate managers, and increasing liquidity in the stock and options markets, guys. What have we been talking about now for months? The liquidity issues, right? And the party identifiers and the purpose of information could facilitate better surveillance by FINRA for regulatory compliance of its members and could improve its ability to enforce such regulations. Bam. They're coming from, guys. All right. I believe, yeah, after this, there's nothing really. I think I got the key points, but I just wanted to cover this, guys, because it has to do with, you know, I think mostly AMC and what's been going on with GameStop and all that in the past year. And I think they finally have them, you know, cornered, these hedge funds, these short sellers that are gonna, I think, be pretty, I think they're gonna be forced to close out soon, in my opinion, right? So you see all these green stocks today. We're talking about Lucid, BBIG, Bitfarms, AMC, right? All that stuff, guys. Yeah, so I believe that's it on this. I know it was a lot, guys, but it's there. The details are insane there. Let me see if there's anything else I gotta show you over here real quick. Just look at the chart real quick. What do I have on this one? Okay, the short interest, just to close this out, guys, okay? The current short interest today, 20.81%. Still was this of what they reported, right? I just explained that there's most likely synthetics out there, but this 106 million, right, is what is on there, which they still owe. Current estimated short interest is approaching 21% of the free float. There have only been 2 instances in the past year where short interest has been this high, January and June. In both instances, the stock ran up significantly. Next leg higher will take us above 220, right? So I don't know who this is, but I just wanted to take a look at this. Bam, guys. All right, apes are going apish right now, okay? All right, guys, I'm gonna let you go. Thank you for stopping by. Thank you for subscribing. If you found this helpful, right, please share it, comment, like. If you have any questions, right, hit me up, guys. All right, so I'll catch you in tomorrow's video. Later.